Okay, we're a few minutes into trading, and we're seeing some notable buying on Bay Street and Wall Street. The biggest catalyst coming from some Bloomberg reporting. Stocks kicking off the week with gains as traders are basically looking to the beaten down tech shares after some reporting that U.S. President Donald Trump's tariffs, all the worry about that next round in early April, could be more targeted than anticipated. That's reduced the appetite for safety this morning. Tim Chubb is the Chief Investment Officer at Girard and joins us now to talk a little bit more about the mood of the markets. It changes, it seems like, hour by hour, Tim, but how would you describe it this morning?
Yeah, it really does change hour by hour. Thanks for having me. Ultimately, I think the market's still wrestling with, whether or not we have the Fed put behind our back following last week's comments from Jerome Powell and ultimately using the word transitory. So at the end of the day, I think, there's definitely going to be some upward pressure on inflation and downward pressure on growth. And I think the market's just trying to wrestle with the magnitude of each one of those variables.
And how are you thinking about where to position? Already this morning, I've had a couple of convincing cases from two different strategists. Somebody who said there's still plenty of opportunity in North America, whether it's Canada or the U.S., even if they're in a trade war, and that the rally we saw in Europe could be short-lived if you look at the long-term trajectory for some of the businesses that are associated with that market. I spoke to somebody else who said, look, I wouldn't be looking towards certainly the technology sector at all. I'd be, very defensive, look towards staples or utilities, but don't focus on stocks tied to, consumer spending, all that kind of stuff. How are you thinking about the kinds of investments you want to own right now?
Sure. So, we're allocators. So ultimately, we're getting that broad-based, exposure for our clients across the globe. And last year, coming into the end of the year, we had seen, just what seemed like capitulation really for international stocks, ahead of the new administration coming in. We've rebalanced into that. And so I think, ultimately being selective on the international front makes a good bit of sense. And there's a lot of China plus one countries that'll ultimately benefit from this rewiring of globalization. But here in the U.S., I do think it makes sense to be defensive. We really haven't seen, the soft data converge with the hard data just yet here. And, looking at some of the data, related to the labor market in particular, I know in a prior segment, they were talking about Torsten Slok's, comment this morning about 60,000 jobs being added as a result of immigration. And I don't think that's priced into the market. Most of this sell-off really seems to be a lot of momentum unwind from our perspective. And although a lot of the defensive sectors, are starting to get pretty pricey, there are some, areas on the cyclical side of things that I think, for long-term investors, you can start nibbling at a little bit.
Okay, let's go through a couple of examples because you had told our producers that EMCOR, EME, is an example of a kind of a company that you like. Can you tell us a little bit more about what it is in their business that appeals to you?
Absolutely. For EMCOR, we're ultimately looking at, what companies have that expanding moat, not just a really durable moat, but one that's expanding. And I think the market has been, really having a hard time wrestling with some of the parallels to, the dot-com bubble on the, fiber side of things. Will all this AI spend, likely resemble that? And that really doesn't seem to be the case from our perspective. For AI, for a lot of enterprise technology companies or enterprise companies like ours, we're owned by a publicly traded bank. I think enterprise is still trying to figure out artificial intelligence, and I think there's a tremendous amount of demand that's coming, and we can see that by all the demand from NVIDIA and Broadcom and Marvel. Their chips are being used, and the question is, how quickly can these applications come online? Ultimately dissuade some of that fear, from a ServiceNow or Salesforce. But we really like EMCOR. It's a bit more cyclical, but they really have this unmatched technical expertise and a skilled workforce for mission critical infrastructure. And so, in particular, they've been seeing some sell-off. Some sluggishness right now in the market, around that AI data center investment concerns, which, we've been, much more convicted in, as a long-term story playing out.
And interesting on that AI theme, last year people really started to get excited about Tesla's robo-taxi plans. Obviously, Tesla's had more volatility than any other stock you can think of this year. But last year, the gains in Tesla seemed to be coming at the expense of Uber, because a lot of people kind of look at these two as potentially long-term competitors. This year, Uber's had great performance. We keep talking about how tech stocks are down for 2025. Uber is not.
Yeah, Uber is in the perfect position for this autonomous cycle. Really with that two-sided, ultimately flywheel where more drivers, more riders, and ultimately that creates better pricing environment and a stickier customer base. And so they've been generating an enormous amount of free cash flow. That spigot's really allowed them to invest in some of these future endeavors. But Tesla is the only Magnificent Seven company that we don't own in the portfolio, and there's good reason for that. Beyond ultimately, so it's a car company. It's got car company operating margins, and so we're going to be pretty skeptical with some of the news that may come out in the next couple of weeks, in particular on the AV front with Tesla, because the data actually hasn't been there. So I'd much rather focus on a company like Uber that's going to be the aggregator who has that data that's super rich and ultimately informing what I think is going to be a pretty nice path of profitability and application of autonomous driving in the future.
Okay, appreciate it, Tim. Thanks very much. Tim Chubb's the CIO at Girard with